how has Deap Capital operated over the years in all ramifications?
Thank you very much. I would say that we've done impressively well. If you remember that by June next year, we'll be 10 years old. So the history of this company goes beyond the time we got quoted on the exchange. Ideally, it should start from 2002 when we started operation. And if you look at the numbers since that time, if you look at our size, if you look at all the things we've been able to do, one can safely conclude that we've done very well.
Okay, sir. Now, there has been global recession without Nigeria being an exception. So what has been business survival instincts generally?
Well, I think that is where maybe when people assess our performance as a company in the last 3 years, they think that we haven't done well because they're only concentrating on those past 3 years. The structure of our business, one has to understand it to be able to now understand why we are where we are and why we want to go to where we want to go. Essentially, we're set up as a fund management company, and we're investing all our funds typically in the stock market. In the first 5 years, it paid off, we made money, and then at the same time, we thought that maybe if things change, we may lose some of those monies. So we decided to diversify, and that was what brought about investing in resource securities so that we can earn fees by our sister company trading on clients' instruction on their portfolios. Secondly, we also invested in resource savings and loans, which is a mortgage bank, which is, even though it's a financial services company, is in a different sector from what we are doing, which is basically trading in stocks. And the third one is that we made investment in DVCF Oil and Gas PLC, which is a venture capital company assisting Nigerians to take advantage of the activities in the oil sector arising from the local content legislation. We did all this between 2005 and 2007. And then by 2008, we had the global recession, which affected all world economies, not just Nigerian companies. And as a result of that, we couldn't maintain the momentum we're having on our growth path. And that has slowed us down in a way, because when it came, we now found out that most of the assets we were holding, which were quoted securities in our portfolio in Deap Capital, we had to make provisions for losses in those assets. And that gave rise to what you are seeing today as provision for losses in our investment that we are holding. And if you look at our result for last year, you look at 1.5 billion loss. If you go to analyze it, you see that most of that came from two things. One, the provisions we have made on those portfolios where we have lost money or where we are likely to lose money because the price has gone down below the cost at the year end. And secondly, we borrowed funds from members of the public in terms of funds under management, borrowed from some financial institutions. So interest had accrued on the funds we had sourced with which we acquired these assets. And when you combine those two, you just find that those losses are inevitable. So that is what has happened. Now, talking about strategy or instinct for survival, we looked at this and we now said, well, must we continue with this business model? It paid us well in the first 5 years, and we made investment, we diversified. What is likely to happen if this kind of thing happens again? Once bitten, twice shy. So we decided that we must do something slightly different, but building on our strength, on what we have been doing in investment banking. And that is what brought about our plan to become a merchant bank. And not just promoting a new merchant bank, but transforming some of the things we are doing in Deap today to become that merchant bank. So in terms of survival, we have looked at cost reduction. We have also looked at going into some new areas. And part of that is what brought about the plan for the merchant bank and some new products that we have on the pipeline.
Okay, Deap Capital stocks has been at 2 naira 2 kobo. That is quite stagnant for quite some time now. What is responsible for this?
Okay, you know that early 2008 we approached the regulators who wanted to do an issue. We wanted to do a public offer of 1 billion shares at about 7 naira 50 kobo. Then our stock was trading above 9 naira. And then, of course, you know you have to go through the process of getting approval. In between, somewhere along the line, we now found out that because of what has happened in the market, that offer wasn't going to be possible. Actually, the SEC had approved, stock exchange was slow in approving it, and later the market started dropping, and they lifted the suspension on the stock, and the price came down to about 6 naira, and we went again, and then we now wanted to do a bond. Again, we went to SEC after a lot of interaction. They now said to us, you can do a bond, but then it doesn't have to be done as a public offer. Do it by private placement. To us, that was a disadvantage. We're a public company, and if we are going to do a bond, it has to be a public offer. So we went back again, and then decided that, okay, if that is not going to be possible, because we needed funding, and we needed to also be in a position to have a more steady source of funding, as opposed to getting something that is 90 days, 180 days, or 1 year. We were planning for something that will be there for a long time, or at least 5 years. So it was on that basis we now decided to do a rights issue. By the time that decision was made to do a rights issue, the stock had dropped to 2 naira 2 kobo, and it was placed on technical suspension. Precisely in June 2009, we made an application to the exchange, and they placed it on suspension, and then we went to SEC for the approval. Somewhere along the line, you know what happened in 2009. Okay, in August 2009, precisely August 14, CBN intervened in the banks, in the 8 banks, that brought about more crisis in the industry. And as a result of that, the regulators were not ready to even look at our proposal for the rights issue, and they just kept it for a long time, until just about a month or 2 ago, when they now decided that we can revisit the issue. And as I speak to you, we have sent a revised rights circular to them, which they are considering, and we should receive approval very soon. And so to answer that question, when a company is trying to do an offer, its stock is placed on technical suspension. That is what is responsible for that. But you would have also noticed that in the period, people have been trading the stock. It's not as if trading is not taking place. It's not on suspension. Exactly. People are buying and selling, maybe because the price is constant. Buyers are not able to get the price they want, and at the same time, maybe sellers are also not willing to part with it, haven't held it for a long time. You should also understand the characteristics of our stock. We have 1.5 billion shares paid up, fully paid up. It's not a lot, and most of these, about 48%, is held by core shareholders, ideally people who sit on the board. So if you are not seeing so much activity on that stock, it's because many of those who have large chunk are not willing to sell, while those who have a few quantities here and there are also not encouraged by the price they are seeing. So that is what is responsible for that constant position in the price. But we are hoping that with the conclusion of our rights issue in the next 1 to 2 months, we should be able to see the stock float.
So will you find a way to let that push Deap Capital stock out of the technical suspension?
As soon as the offer is completed, the rule is that 2 weeks after the offer closes, they will lift the suspension. So if we get approval, say in about 10 days' time, as soon as the offer opens, 2 weeks after the offer has closed, they will lift the suspension.
In your last audited year-end financial stated that you have 1.5 billion naira, let me not call it loss, but depreciation. Okay. You also have negative net asset posture. I don't want to go into the figures now. But of course, another year-end is here, September 30, 2011, and you are about to release your audited version of that financial. Now, basically, what is the outlook for what we're expecting this year?
Much better than what we had in 2010. As I said earlier, you find a situation where The provision for losses in stocks that we have has been made in full by end of 2010. And so this year you are not likely to find anything significant in that respect. Secondly, even the cost of fund, we've been talking with our clients, and many of them also we've been able to convince to reduce the average rate of return they expect from our relationship, to the extent that we've been able to gain over 300-400 basis points on our own side, giving a reduction in such rates. And then you also find that cost reduction measures in other areas we have implemented. So these are things that have impacted positively in our performance. The other one is that even where we have relationship with, like the type we have with banks, we're also negotiating. You know, a bank, when you have a facility with them, if a payment falls due on 31st of maybe October 2011 and you don't make the payment, by the next 1 week, they are already slamming you with penalty charges on that payment. And if you have a good relationship with your bankers, by the time you're addressing the issue holistically, these are areas where you can get concessions. And we're already doing that with majority of the banks we are dealing with, where most of the funds, where borrowed funds came from, and we're having some favorable response, so that some of the losses we have carried in the past may also be reversed based on this understanding, provided, of course, the terms and conditions of such agreements are kept on our own side, which we are trying to do. So in summary, we should have a better performance, much better performance in 2011 compared to 2010.
Okay, your earnings per share is like ₦1.19. What are you doing to boost this to a better posture?
The provisions were made in 2008, 2009, and 2010 on stocks that we made losses on. We have provided in full for all such losses. And in 2011, we don't have stocks that require such provision, because we have also been able to realign our portfolio such that if you look at our financials for 2011, what you are likely to see is maybe a performance that is much, much better than that of 2010, because that provision is no longer necessary. But a major challenge we face is cost of fund, which we are trying to address with the rights issue and other strategies of sourcing longer-term funding and cheaper funding.